Hi, I'm Phil Fiegler. How you doing? I'm an enrolled agent in Oakland, California. My company's called PhilTax. You could learn more about us at www.philtax.com. This is the fourth of a series of informational videos on employee stock options. So this one's called Stock Options and Taxes 1D, Incentive Stock Options, or ISOs. An ISO will always be identified as such in the grant document. It'll mention that it's subject to Internal Revenue Code Section 422 and say it's an incentive stock option. Because the tax reporting is so unique for these, it has to really be made clear. If you've seen the clip on ESPP's, Employee Stock Purchase Plans, this next thing's going to look familiar to you. It's a time element. 2 years from the date of grant and 1 year from the date of exercise. If you're able to hold your shares for that time period, you will eventually have what we call a qualifying disposition. If not, you'll have a disqualifying disposition. A few definitions. The grant date is the date they give you the grant document. The exercise date is the date you buy the shares. You get a discounted price on the shares. The amount of that discount is what we call the bargain element. If you do hold an ISO long enough to have a qualifying disposition, you will be able to have a capital gain on your sale instead of ordinary income, which is wages. This is one of the reasons they call it an incentive stock option, and one of the reasons the code considers it to be preferential tax treatment. There's also some bad news, however. A taxable event is created at the time you exercise the option. And it's kind of strange and misleading, because there is no taxable event for regular tax purposes when you exercise the option, but there is for purposes of AMT, alternative minimum tax. Here's how it works. The day you buy your shares, aka exercise, the bargain element, which is your discount from the fair market value of the shares on the day you bought them, is an AMT preference. That goes into your AMT computation and is part of determining whether or not you owe AMT and how much, which ends up getting tacked onto your regular tax bill. For example, you have an ISO for 5,000 shares in your company, XYZ Corp, at $1 a share. On the day you exercise, the stock is selling for $15 a share, or is worth $15 a share, because they could exist in a non-public company as well. So essentially, you give them $5,000, you get 5,000 shares. But you had a bargain element of $70,000, because if you bought the 5,000 shares at fair market value, you would have paid $75,000 for them. So the $70,000 bargain element becomes an AMT preference, which is one line item on your long and complicated AMT form. Now, if you're lucky, depending on your tax situation in the following few years, at one point in time, you may receive an AMT credit for having paid all this AMT, and you may get some of your money back. If you have a qualifying disposition, you will achieve a capital gain as opposed to ordinary income. Let's continue with the example we just made. You have these 5,000 shares, you paid $5,000 for them. The stock is now $25 a share, and it's more than 2 years from the date of grant and 1 year from the date of exercise, and you sell your shares. Your proceeds are $125,000. Now, your basis for regular tax purposes is only $5,000, remember. So you do have a $120,000 capital gain. However, capital gains are taxed at only 20%, provided that you make less than 400,000 single or 450,000 married. So you are getting a much more favorable treatment than you would if that money was taxed as wages.
Okay.
Let's take a look at what happens for AMT now in that same disposition. The thing you have to understand is an AMT return is sort of being done in the background at the same time your regular tax is being done. And then the tax liability from the two returns are compared to each other, and you pay the highest of the two taxes. It's mostly done by software, except the preparer has to know what they're doing because there's some input which has to be added. For AMT purposes, your basis was $75,000. The $5,000 you paid plus the $70,000 AMT preference you got hit with in the year of exercise. So ultimately, your AMT gain will only be $50,000 as opposed to $120,000. Your AMT gain will be $70,000 less, and you will actually have a minus $70,000 figure in one of the lines on your AMT form for that year. This could ultimately help you get that tax credit I was speaking about a few minutes ago. What happens in a disqualifying disposition? You did not hold from 2 years from the date of grant and 1 year from the date of exercise. There are a couple of interesting quirks. The first one is if you happen to sell those shares in the same year that you exercise them, you don't pay AMT. Whoa, that sounds good, but not really, because instead of paying AMT, that $70,000 bargain element becomes wages, which you probably even want less than AMT. That's the first thing. The worst thing of all happens if you exercise in year 1 and sell in year 2, but the sale occurs before the cutoff date for a qualifying disposition to happen. So you exercise in year 1, you pay AMT upon the exercise. And then in year 2, when you sell, at that time you have not yet held for 2 years from the date of grant and 1 year from the date of exercise. In addition to paying the AMT in year 1, in year 2, you're going to receive wages as opposed to a long-term capital gain. That situation I just pointed out is very unpleasant. And obviously, you could plan that if you exercise in year 1, you're not going to sell in year 2 until after you have met the guidelines for a qualifying disposition. When it backfires on you, what could happen is in year 2, your company could be acquired in a cash deal, meaning they bought out all your stock, all your company's stock, in which case you would then have to give up your shares, and if that happened before the qualifying disposition date, you would be stuck in that same unfortunate scenario of AMT in year 1 and ordinary income in year 2. ISOs require planning. You need help to deal with them. Please remember, while all the situation presented was accurate and factual, it does not cover every possible circumstance and situation, so you should always seek professional advice in these matters. Thanks for watching our videos. I hope you enjoyed them. You can find links to them at our website, www.philtax.com, and we hope you have a great day. Thanks again.